All right, let's talk about a stock that's been making some serious waves lately, XOTX Therapeutics, or ticker symbol XRTX. Today we're going to break down all the technical signals and figure out what's really going on with this highly volatile stock.
So, what is going on here? To figure that out, we're going to have to put on our detective hats. We'll look at the data, follow the clues, and piece together the full story. And, every good investigation starts with one compelling piece of evidence.
And here it is. Get a load of this number. A volume increase of over 1,700%. Now that's not just a small jump. That is a full-on earthquake of investor interest. It's our first major clue, and it begs the question, why is everybody suddenly paying attention to XRTX?
Okay, before we get into the nitty-gritty of that volume explosion, first things first. We've got to zoom out and look at the big picture. Is this just a flash in the pan, or is there a real solid trend here?
So here's the quick and dirty snapshot. It's sitting at $1.10, and that technical score of 75, that's really solid. But what I want you to look at is that 52-week range. It's way up from its lows, but it's still got a lot of blue sky above it before it hits its highs. There's definitely room to move.
And the evidence just keeps piling up. We've got a strong trend strength score, a high-quality trend index, and it's trading above all those key long-term averages. I mean, you couldn't paint a clearer picture of an uptrend if you tried. The verdict is in. This is a powerful, confirmed uptrend.
Okay, so we've established the trend is our friend here. It's pointing up. Now let's circle back to that absolutely crazy volume surge we saw. What's that all about? Let's follow the money and see where it leads us.
I love this number, 48.74. That's the relative volume. To put that in perspective, it means trading activity is almost 50 times higher than average. Imagine your local coffee shop suddenly having a line 50 times longer than usual. You'd know something big is going down, right? Same thing here. And look, this isn't just a bunch of random noise. It's the quality of the volume that's so impressive. The money flow index is basically at 100. That's not just buying, that's what we call conviction buying. And the volume isn't just high, it's accelerating. It's picking up speed.
All right, so we know the direction is up, and we know it's got a ton of fuel in the tank with all that volume. But the next question is, just how fast is this rocket climbing? Let's check the speedometer, because we need to see if this engine is at risk of overheating.
So before we see the number, let's quickly talk about the RSI. It's basically the stock speedometer. It tells us how fast the price is moving. And just like with a car, if you push the pedal to the metal for too long, you risk redlining. For a stock, anything over 70 is usually considered that red zone. It's called being overbought.
And yep, here we are, 75.07. We are officially deep in that red zone. The speedometer is flashing a warning.
Now this is where it gets really interesting. Overbought can be a bit of a head fake. Does it mean the momentum is just so incredibly strong that it's going to keep ripping higher? Or is it a warning sign that this thing is about to run out of steam and needs a break? Which one is it? And yeah, all the other dials on the dashboard are telling us the same story. The momentum is clearly bullish, no doubt about it. But look at the stock RSI and the Arun oscillator. They are both pegged at 100 maxed out. This engine is running very, very hot.
Okay, so with all that in mind, the strong trend, the massive volume, the red-hot momentum, let's switch gears and get tactical. Where are the key battlegrounds for this stock right now? What are the price levels we need to be watching?
First up, our support level. Think of this as the floor. It's at about 94 cents. If the price starts to pull back, this is the line in the sand where buyers might see a bargain and decide to step in, propping the price up.
Next, we have the pivot point at $1.17. This is basically the 50-yard line for the day's trading. The bulls want to keep the price above this level to stay in control, while the bears will try to push it below.
And finally, we've got the first major ceiling, or resistance, at 134. This is a key hurdle. If the stock can break through it, we could see another big leg up. But expect a fight here, because this is where sellers might start to take some profits off the table.
So we've gathered all the pieces of the puzzle. The trend, the volume, the momentum, and now these key price levels. What does it all mean? Well, it points to two very different potential paths forward from here.
Here's how it could all play out. The bullish case is pretty simple. If the price can break and hold above that 117 pivot point, the next logical target is that 134 resistance level. But there's always a but, right? The bearish path gets triggered if we break below that 94-cent support floor. That would be a sign that the overbought conditions are finally taking over and we could see a pullback.
All right, let's step back for a second and bring it all home.
We've done our investigation. We've connected all the dots. What's the final takeaway? What story is all this evidence telling us?
So here's the final verdict from our investigation. The trend in XRTX is undeniably strong. The volume is absolutely massive, showing huge interest. But that momentum is screaming overbought. It's a classic setup. There's huge potential for more upside, but it also comes with a much higher risk of a sharp, sudden cooldown.
And that really leaves us with the ultimate question. We've got a rocket that's clearly running hot. Is it about to hit another gear and just continue to soar? Or is that engine about to sputter out, leading to a much-needed cooldown? All the clues are on the table. The story could go either way.